The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 8th day of February. My pleasure to be here. Thank you for the great programming from our hosts up until now. Let's try to keep up that standard. Dow's down 29 at 20,060. S&P is up 37 cents at 22.93. Going to be very interesting here. The composite index is up 5 at 56.79. VIX is down at 11.29, unchanged. Wow, that VIX. Been hinting all the time that there's internal buying. We're looking at the trend, which is at 0.96. Just says, ho-hum, nothing much to see here, folks. Now, the E-mini is up 25 cents. There are a couple of patterns that we're looking at. We're looking at the cup pattern. We're looking at whether or not the MACD can cross positive sharply. It can't just sneak above and then pull back. That's a deflection lower. And the stochastic's not very strong at 73%. I am still anticipating 2299.75 will be hit for leg D. Here's a 120-minute chart. Brand new leg A. Here again, MACD has to cross positive. You need to see 2291 to be able to say that there is internal strength that's being maintained. Really nice comeback from earlier this morning when the market was down, but that's not good enough. And a break, let me show you on the 10-minute chart. Here's the 10-minute. We've got a whopping leg B. Hit that resistance line right there. Let's pull back under it. You need to see, as I say, 2291.50 will break out. It'll be very positive. Now, within that context, it is impressive. You see, let me just go to this chart here if I can show you for a moment. Here's a 2-minute chart. It just made a right side leg D, probably peak D, above the recent high of 7 o'clock this morning at about 2289.50. Was that today? Yep, today. And then the other one is 2289.75. Went above it. Now it should do a little testing to see, because that's the left side lip, and we should see whether or not it's able to spike back up and go to the 2292s. At this point, the 2286 is really critical, because if it breaks under that, it says, you know what, big struggle. Now, I must admit that the reason why I'm thinking that there is going to be some upside, and I said to subscribers this morning in my newsletter that there are a couple of things that are going on. And one of them is, let me just find it right here. I show a lot of charts. Let me go through this. Today, I actually showed 2 Dow charts. Let's move this across right here. I showed the one with no MACD and stochastic, just the 20-period moving average in red, and this dark blue 9-period exponential moving average. I also showed that there's an expanding wedge, and this formation usually says there's a lot of resistance every time you get to the slightly higher high. So far, we haven't broken under, over the last week, we haven't broken decisively under that 20-period moving average to say we're going to go test the lower trend line. Here's the same chart with candlesticks a little wider, and you can see that the MACD is trying to cross positive. The stochastic is still negative, way down to 73%. It needs to be above 80%, strongly above 80%. And what I'd said is that there are signs that there should be some upward action because the S&P has an unfulfilled leg D. Whoa, what do I mean by that? Let me get to that in a moment. Let me also show you something else. In the right. I'll find it in a minute. Where is it? My 120-minute chart. I think I did it earlier last night. No. Oh, I hate the silence. You can't have silence when you got a radio show. So that was the Dow. Oh, there it is. So the 120-minute chart did the Chapman wave 5 to 20,155. It's pulling back. Now, what I'd said is For that 5 to be moved over a little bit, you've got to very quickly get over 20,155. Otherwise, there's a different chart pattern. We might not be looking at a Chapman wave 5 analysis at all, if that's the case. But it did make a peak D in the 120-minute Dow chart. And the MACD is good. Stochastic's okay. I said it's not good enough. It needs to be at the 83% or higher level. So that's that. Then what I did is in my overview, I always do this. The 5 quadrants with the Dow 120-minute chart, peak D, the 120-minute chart of the VIX right there, and in the lows at 11.29. Right now it's at 11.29 unchanged. And the TRIN index right there, Chapman Wave short-term trading index, and the Dow daily chart, just a bar chart of the daily and a bar chart of the S&P. And you see the Dow went to a new all-time high. S&P has been failing to do that. I think it's going to do that this week. Now, what's really important is that within the context of everything I'm looking at, I did get a reading that suggested in the volatility index that there should be a Chapman Wave trend gauge within 2 days, a spike to the upside with the futures going to a 9 to 11 point gain that impacts positively the cash. Well, the futures have gone from a low of 2281 to 2291. So far that's at 9 to 10 to 11 point, and that should be one of the reasons why I didn't want to short at all. It's because there are still favorable readings for some of the indices. Not all, but some of them. So let's get back to our nitty gritties here. And we're going to go to the QQQ series. Where did it go? Right there. QQQ. New recovery high today. Leg D in the weekly. And this is E in the, I'm calling it E for now, in the daily. D in the weekly. And if the stochastic starts to hold in the 93s, we can expect even higher highs. If it starts to plunge into the 85 to 80 area. And the 120-minute chart, leg E. So everything's coming together. So we could get some kind of a short-term top here, and the leg C continues in the monthly chart. Very positive so far. The IWM, I was asked about the IWM. Yeah, it's struggling. It's within that channel until you decisively break this channel, down channel, and that'll be a move to the 137. To be honest, you're ready to hit 138. So once you do that, the 138.82 high is fair game. Until you do that, it just says, hey, I'm stuck in the 137 or lower area. I'm struggling to break out of it. I made 1 cup, 2 cups, maybe I'm into my 3rd cup, little 3rd cup of teas here. Well, they're actually a 3rd cup of U's. Okay, so that's the next one. We'll see. But nothing yet in the IWM. It hasn't broken down, hasn't broken out. It's just kind of stuck. 138 begins another up move. 132 says, uh-oh, it's all over. Be real careful. Now, what am I going to do? I'm going to go to gold. Gold is so persistent. It's amazing. Up $6, extends leg. Whoa, wait a minute. Oh, leg C, because yesterday I had a double top, exact double top. 1237.5, 1237.5. So this extends leg C. There should be a D to come. This is a very strong leg A. I want to go to crude oil CL. Nice turnaround. That 200-period moving average is really important in my work, especially the 200-period smooth moving average in this case, because that was the rebound area. So crude oil's rebound. It's just stuck between the 51s and the 55s, I think. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let me just do this because a number of questions came up. I'm going to just show you the 2-minute chart of the gold because in the den, Mr. Bull showed. Now, why is it not working? Uh-oh. Why is that big arrow there? Okay, maybe it was just refreshing. I hope that was just a refresh. There you are. Okay, peak D in the 2-minute chart of gold. Just wanted to show you how the fractals work in whatever time frame it is. Now let's just look at crude oil one more time. I wanted to mention. I was going to do that, then I completely forgot. I needed to look at the monthly chart. Remember, I drew in the arch formation, in the Chapman Wave methodology, a lowercase h can become a lowercase m. That means there's a subsequent arch formation right next to it. That's what I'm looking at, and that's the reason why I was saying that I think crude oil is kind of stuck for now, and that if it did break into the 49s, that's very different, and that suggests that the arch formation could go even lower. But in the meantime, we're just kind of stuck in a range, and I just want to think of it that way. I don't really see, I keep getting questions about whether it's a short or not. I don't get it as a short just yet. The technicals are actually weakening in the daily, but the weekly chart is still holding. I mean, it's okay. It's not great, but it's holding okay. And the monthly chart is still improving technically. Of course, I've got a whole month to go. But that's what I wanted to just say. Yeah, that's how I'm looking at it. Just wanted to glance at silver. I got a bunch of questions I'm going to get to right now. Silver's leg D, way above the 200-period moving average of 17.45. It's at 1778 and 18 point, is that 15 or so? Let me just, my eye says it's somewhere around there. 18.05 to, yeah, somewhere around 18.05 to 1810. That's the 200-period simple moving average is what most fund managers, in my experience, use because they just grab whatever is there, and it's usually the simple moving average. Now, let me just show you something here. The IYT is in a high-level consolidation. Crude oil pulling back should have been a really big boost, and it hasn't been a boost. XAL. Here's the airline index, and it's not, look, 17 cents, up 17 cents. There's a peak F top in the weekly. I'm calling this a B in the, I should really call this an alternate count. A, B, C, D/B in the monthly. I'm just going to do that for now because I want to be absolutely sure we've got all bases covered in the sense of the waveform. So far, it's still holding very well above 100. It's at 107.31, but it made a G at 115.55 on the 16th of December, and 115 down to 107 is 8 points. So that's almost 5%. So, yeah. So what I am looking at is that the IYT, the Transportation Index, is giving us a hint that we've got to be a little bit careful here. Okay. Now, next question was, so CG is a question just acting very poorly. The Carlyle Group, something about a fund. I don't know what it is. Made a G in the daily and a D in the weekly. I'm going to put a down arrow here, a little premature maybe, but I'm putting it in to say I'm looking at the monthly, and that monthly has that H that goes to an M pattern. So Carlyle Group trading at 16.35 down 80 cents. Be careful with it. Next question was, I'm running down the questions. Yeah, the truckers. So let me go to SWFT. I haven't done that for ages. I had it. Yeah, but I have it notated. Yeah, not good. A peak G in the weekly. Monthly's okay. It's in a B, but it must hold 2166, and it's at 2235. Peak E in the daily. It looks to me like it wants to retest the 2136 area, the 200 period exponential moving average. Not great. Next question is trucking. So UPS, so let's just update UPS. Remember I spoke about Federal Express. Yeah, UPS, terrible. Federal Express, giving back most of the gains, holding okay, but giving back most of the gains. I'm watching these real closely. If Federal Express at 187 breaks under 180 in February, we have to be really careful market-wise. It's telling us a lot about the retail index. It's telling us just about the overall market. And retail index at 76.51 is just stuck in that H pattern. So here we go. The next question is, Wayne wants to know about TBT. He has two positions. So Basil, can you look at TBT? I have two positions, a trading and a longer term, Wayne. So Wayne, this is what I'm looking at here in the TBT, which is the inverse of the TLT. It's the ultra short Lehman 20-year Treasury bond ETF. And for the life of me, so it's 1.84, and the TLT is up 94. So this is 2 times short. I always forget. I hardly ever have the TBT as a position, so I just completely forgot that it's 2 times. Yeah. This is what I'm looking at. Now, I need to get out of this for the moment. This is that the workspace that I have that has the Chapman wave levels of resistance and support, 221. You can see right here on the 5-minute, 229 and 32 on the 2-minute. Let me just get out of this because I want to show you something very interesting. And this was the reason why I said I don't want to have an opinion just yet. I don't want to change my opinion about the Japanization of our bond yields. I need a little time. I need this probably the whole first quarter to really assess whether we've had a major change in dynamics in interest rates. I think there has been a pretty substantial one, but is it a major? And wood, which is the iShares Global Timber Forestry, is still at peak E. It needs to break above 56.50 to really break out, and I will then call that not an F. I think that actually would be a very positive situation. And housing, talking about interest rates, at 257.61 is the high to break. It's at 249.52. So far, I am going to call this an E rather than a B. But this is what I wanted to look at, not the South African index, gold index, or yeah. Look what's happened. Remember, I said that the resistance line from the peak either was made in the 30-year, the 30-year TYX yield. The high was 31.97, 3.197% on the week of the 16th of December of 2016. And now it's made a right shoulder failure. And I can just tell you this, that if the TYX, the 30-year, it doesn't have to close, but if it trades underneath 29.02, let's call it 29. If it goes under 29, I'm suggesting to you that the Japanization of our bond yields could still be in place. Wouldn't that be amazing? And that's the same thing that goes with the 10-year, the brown one here, and the cyan one. Well, it has gone below the low that was made the week of the 20th, 29.13, and so far the low is 29. Oops, what am I talking about? 29. That was 1804, and now we're looking at 1796. That's hinting, the 5 years hinting that the others are going to follow. We're going to be watching this real closely. Now, if bonds are rallying and yields are declining, often you'll find that bonds are rallying because there's weakness in the market. Weakness in the market when the Dow is an eye blink away from 20,155, the high of yesterday. Something's going on, and this is very interesting. Now let's do this. I just want you to look at as I was doing it, I said I've got in the New York Stock Exchange, NYA.X. Here we go. New York Stock Exchange has a long way to go to get to its leg D in the weekly chart at 11,344. It's trading at 11,244, 100 points away. This is going to be very interesting. We'll talk about it when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm looking at just such a well-run company. I haven't actually been there for a long time. I used to go there, not often, but it used to be the place to grab a bite every once in a while. Panera Bread, PNRA, it's up 16.56 at 230.84. Look at this. I hate to say it. The reason why I hate to say it is because it was just off my radar completely, but it's at an all-time high. All-time high. It's at an all-time high. Wow. And look at the trend line that I can take all the way back from somewhere over there. Look at this. I first want to do it like that, and then I want to make sure that I join it to the right things. There. So look at that trend line. It's suggesting that Panera could, in fact, get to 248. It's at 230 right now. What can I say? Just missed it completely. And the technicals were improved. I probably would not have gone on after that peak D top. That would have said, this looks like an EF maybe, an FG, EF, or something strange. But bravo to Panera. Very good. I'm very impressed. Nice job. Yeah, I think that it was started here in Brookline, Massachusetts. Basil and Panera, the stochastic, and MACD fading. And yeah, that's what I'm saying. I don't know. I would have. This is where fundies count. And if you were a fundamentalist and you did your analysis and it seemed to you that Panera everything was there, I would have had to trade it in fundamentals. I could not have done it on the technicals. My technicals said that it should come back and test under the 200s, probably the 185 area. Here it is at 230, 50 points high. Thank goodness I never even looked at it. Rather than make a mistake. And that was it must have been a great earnings because it's following up. Now, I had a question about Orly, O'Reilly. Yes, we're still short. We took two tranches off. We were short from 282, just over 282. Took something off at 261, took it off again at 259. Nice gains. And then I said, you know what? I think that it's going to have a spike because of the news. It always comes out with some good news for earnings. And then I think it's going to make an arch formation to come back. So we've held on to a core position from the top. But this is going to be very interesting. And even more than being interesting, I'm looking at it as there's a chance that the 200-period moving average of 270.80s, that becomes both a kind of a target area and a repellent zone. However, if it breaks down from here, you'll have an island reversal. And that says if there's any rally towards 277.42 to fill the gap, I'd be really impressed. I'd say, forget it. I don't know if I want to be short Orly anymore. That's the way it is. All right. So now let's do this. I had a couple of questions here. We could just go. Yeah. So the question is, could we be consolidating? Yeah, that's what I've been saying. That the way I'm looking at it here is that I think there's a high-level consolidation in the yields. There's still the threat that the Fed wants to raise yields, but I think it's going to be. What do I mean by a high-level consolidation? What I mean is, if there's a decisive break under 29 in the 30-year, then you could see a pullback towards halfway. But if in fact that 29 level holds over the next week or so, then this is what I call a high-level consolidation. And then you can anticipate that there could be one spike to try to break that trend line down. So all I'm saying is I'm waiting. I'm sorry. Let's get back to the TBT. That was the question. Whoa, nearly forgot. So the TBT is I'm long. I have a trading position. I have a more core long-term position. So I'm going to just say, Wayne, this is real tough, and I'll tell you why. Yesterday's candle would have said to me, start considering taking off some of my position. Now, I don't have your position. You got the position, and today gapped down. I'm only going to say to you, just looking at it visually, looking at the way there's an H pattern in the weekly after a peak E, looking at the monthly chart, which says I've tried to rally a couple of times, I've made arch formations, and I keep failing. And I've had even better technicals at times, and it's still failed. I'm just going to say to you, I would take off some of my position. I would definitely take some of it, take some of it now off. I'd rather risk the chance of making money than to lose money on this. And obviously, since you just said that you've got two positions, one's a short-term trading position, the trading position is what I take off. You want to keep your core position. There's a lot that can happen, and I'll make it real simple. 38.19 was the low of the 12th of January. A close below that doesn't, for 2 sessions, make it 3 sessions. For 3 sessions, does not close above 38.19. Let me just be clear. You make the arch formation, TBT at 38.80 at down 74, plunges even further, and it goes below that 38.19 low of the 12th, and then closes that session above. Nice. If it doesn't get there, but in fact starts to trade to 39.50 before then, that's very good. It says, hey, you can have another arch formation, but that's that high-level consolidation confirmation in the TBT that I'd be looking at. So if it breaks and closes under 38.19 for 2 sessions, I would say 3. Let's make it 3 sessions. In other words, it can't close once above 38.19. It's got to close below it in 37.90, say, and then 37.70. And even on the 3rd session, it can't. Even if it pops up, it can't close above 38.19. Yields are going to go down with the TBT. Just look at it that way. All right. What you see here is a microcosm of what I was showing you in the TYX.X. Look, there it is. See? And that says a close below on a weekly basis, but I'm doing it on a daily basis, would be very negative, but it has to start off on the shorter time frame. A nice bounce in yields towards the 30.40 area says, great, now you can go. I would then just do this and make another arch formation. But so far, I don't see anything bullish about the TBT or the TYX or the yields. So that's why. Take something off, and I would tighten my stop up. You can always get back into the trade. I know it does move quite quickly, but I'd not risk taking the chance of losing money. Not when it comes to yields, because yields, when they trend, they kind of, as you can see right here, when yields trend, they kind of trend for a while. Look at this. This is a weekly chart. It trends for a while. So we might see a trend now to the downside for a while. And then that means that the Japanization of our bond yields is still in place. Isn't that interesting? Okay, enough with that. Now let's go to, I need to look at Panera has not been in direct correlation with the other restaurants. Panera has and keeps evolving. Panera for years has been the leader, not the norm. The question is if this continues. Yeah, I've spoken about that for years. There's this guy, Shach, I can't remember what his name is, from Brookline. He started it, and he's now kind of out of it. I think maybe he's just a director or something, but he doesn't run it anymore. And they did fabulous things. I mean, they really produced an outstanding restaurant, this outstanding set of criteria that they tried to meet up with and match. So, yeah, they definitely run very well. Dow's down 42. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So let's just once again look at this. So we made a peak D in the 2-minute chart. Remember we discussed that. Let's pull back to 287. This is going to be such an interesting thing. Let me just go through this now. I got a couple of questions, but you know what? I've gone through lots and lots of questions. So let's do what I want to do right now. And that is to show you something very interesting. Look at this chart here. In fact, look at the chart in terms of, oops, I didn't mean to do that. SPX.X, right here. And you will see that there's an alternate count G/C, right? I forgot to put that in on this one. I've got it in another one. With the high that was made in the 26th at right here on the S&P at 2300.99. All we needed, and it's just struggling. See this candle? See the way this candle's trying to rally? All it needs is to go from 2292 to so it needs, well, it's not all, it needs a lot. It needs 9 points to break out to a new all-time high, which would give you your leg D in the weekly chart. And I think that it's going to happen. I don't know when it's going to happen. It should happen sooner rather than later. Why? Because the Dow's already done it and they kind of line up together. They usually work together. So all I can say to you is my thinking here is that we're going to get a lot of information from some of the indices themselves, other indices. But in the meantime, back at the ranch, look at that cup formation. And that cup formation is suggesting, let me just do a 120-minute chart. Look at this. Oops, right here. Oh, I didn't mean to do that. So this is peak A, peak B, a nominal C. Yeah, I think by pennies. 98.16, 98.31. Yep, there it is. It broke it by a penny, well, more than a penny. A, B, C, D. We made a D in the 120-minute chart. Now we're having some kind of a consolidation. So the real question is, are we looking at, say, you don't have to talk about the short side. It's completely independent to you. But are we looking at some kind of a pullback before the S&P gets to 2301? And that would be odd because the Dow, oh, where am I typing? I'm typing somewhere. This is really frustrating. I'm typing right here. The Dow has already done it, F/C. It could go to a new high and make a D. But you've gone very quickly, A, B, C, D, leg D in the weekly chart. The S&P has gone quite quickly to A, B, and C. It hasn't gone to the D. It'd be really unusual for the market to pull back very sharply. I'm talking about 200-300 points in the Dow, 30 points in the S&P, without sneaking to a momentary, just a fractional new high to go to a D in the S&P or the SPY. So my thinking here is, look how close we got in the SPY. It went, the high was all-time high 229.71. That was 3 weeks ago. 229.55 was the high last week. Higher low and a lower high, inside bar. We went to 229.66. I mean, we were 6 cents away in the SPY from making that all-time high. I think it's going to be done. It's struggling, but I think it's going to be done. And now what we have had is we've had that 9 to 11 point, 10 point, 9 to 11 point move in the E-minis. So I don't know if they've run their course right now. So the question, this is a great question. Terry in the Den said, is it possible that in the Chapman wave methodology, we're making a C1, C2 in the weekly chart? And even in the daily, well, it's a peak F, so it doesn't have to go C1, C2. And the answer is absolutely it can. I cannot rule it out, especially since the IWM is already failing to break or even get close to the upside resistance. It's down at 1.07 and 134.17. It's been 2 months. It's struggling, but it hasn't broken down, it hasn't broken up. So I'm looking at this and I think that within the context of the different, I want you to look at the NQ. NQ has gone to a leg E in the daily. Now it's there's always one that has to be absolutely drive you nuts. And in this particular case, I've got this as a brand new leg B in the weekly. I mean, how about that? I don't know how you can even explain it. 4896.50. 4987. So it didn't make a peak right there. I'm quite happy calling it a B. But if you look at the QQQ series, it is a D. And I'm happy to call that a D. Either way, a pullback's fine. And from 126.43 in the QQQs to 123.21, the 9-period moving average, 3 points. It's only, what, 3%, something like that, just over 3. So, no. Someone asked me, how can you call that peak C2 when it's only Wednesday? I was just giving a demonstration. Let me go back. Thank you. I don't want to do anything here that confuses anyone. I can't even remember. What the heck was I looking? Oh, SPY. Yeah. I was just saying that is a question, and it's a very good question, that it could be peak C1, C2. Whew, thank you for appraising me of what I had written and what I forgot to erase. Okay, enough already with that. So SKYW, Skyworks, SKW, that's SkyWest. Oh, Sky, what's the question? Tom wants to know about, do you see any entry point in SKYW? I've never looked at this SkyWest Inc. Monthly chart is A, B, C, D, E, F, made a perfect F. I hate to say this, but I would not be going long. And to tell you the truth, I probably wouldn't even go short right now. Here's the reason why. The monthly chart is still very strong in the MACD. The weekly chart is not. So I would actually have to take a little time and do a full study of this to say, is this a hat trick top? I'm putting a question mark here to see whether or not it's going to get a down arrow. SkyWest trading at 33.05, up 30 cents. Now, my rule of thumb about the Chapman wave Roman candle. That's Chapman wave Roman candle there. Let me make it nice and fat. There. Chapman wave Roman candle. It opens, makes a fractional new high, plunges, and then closes more than halfway above the entire wick, leaving a long tail. My rule of thumb is that if there is a price move to the downside that holds on a shorter time span for a good number of, in this case, it would be the 120-minute chart, because we're looking at a daily chart, a good number of hours, and it then closes halfway under the long wick, the tail, that wick itself. And that would be under, say, 32.90. Let's call it under 33. Well, it did that. My rule of thumb is there's a really good chance that the price is going to test the low. That would be 31.06. And it should happen fairly soon. This is just a perfect Chapman Wave Roman candle. However, I must add something else. If it is one of a series on the way down from the highs, you've got to be careful because it could become a buy signal. Now I have to assess that. So give me a moment. We'll do that during the break. Basil Chapman, Dow's down 53. S&P's only down 2. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So the answer, folks, to the SKYW, trading at 33.05 up 30 cents, is that I'm going to have to wait. I've done my homework. I think there's a potential peak F top in the monthly, the peak F top in the weekly. This is a market message, and there's peak C1, C2. There's a real peak C1, C2 right there. Another way I can count it, that's the high of the 21st of December at 39.60, and then the retest at 39.54 with a round number 39 low. That suggests be careful. Yeah, I don't see a test, but email me in Friday or Monday. let's see how close it gets to the low of 31.06. There could be a bounce to make an H pattern, a 7 or 8% move, and maybe it's worth trading. I don't see it just yet, okay? So I'm a little concerned, in fact, that it's giving me a suggestion here that if it breaks 29, somewhere around 29.50 on a closing basis in the monthly chart at any point, this could be it. And what's that saying about the market, about the airlines? Wow. Okay. So the next question I had was my own question, which was, within the context of markets, what are we looking at here? What's the best case scenario? What's the worst case scenario? I think that's really the way we want to look at it right now. Well, a best case scenario is that we're making some kind of a top here, but it's a top that says, look at the Dow chart right here. It's this chart, not this one, but this one. It says, within the context of markets, if there's a close below 19,840, let's call it 19,840, 200 points below where we are right now, a close, then there's a chance that we could take a couple of weeks and go down towards this trend line. That trend line, well, it's a declining trend line, depends when it is, but it's 10,650 to the 19,600-ish area. All right? That's kind of like a worst case basis that I'm thinking of just at this particular point. I could make modifications to that. I'm just talking about chart formations. If the S&P does have the gumption to be able to make its leg D this week between this very minute and Friday's close, that'll be very important. You could do it next week as well. There's no time limit really. I'm just saying before breaking down, if the S&P has this rally to the upside, it's way better than it's only down 0.09%. Dow's down 0.20 something percent, so it's acting better. So I'm just looking at this and I'm saying so far all I can see is that this rectangle formation, you can see it better here. This rectangle formation is really a big cushion until the 19,700 level is pierced decisively down. This is a cushion, and that's the way we've got to look at it. Just be very practical. Now, are we rotating through the different sectors? Well, I'm looking at this and I'm saying, you know what? The sectors that have got hammered the worst might start to act the best. So I am watching things like maybe healthcare. It doesn't mean to say it's going to act well. IBB has held well so far. Maybe they just hold okay. They're not fantastic, but they give some kind of a cushion, some kind of a relief, an area to hide for a moment in one of the worst areas. So I'm going to be watching for that. But in the meantime, with the IYT, the Transportation Index, acting so poorly, with the IYR, which is the REITs index, kind of holding well and having been smashed from the 86s down to the 72s, that's a huge hit, 14 points. I mean, hey, double-digit percentage decline. I'm thinking that there could be a rotation into the areas that are really going to were terrible and could become safety areas. That's kind of what I'm going to be looking for. Gold has been spectacular. The dollar is trying to rally here. Are we close to some kind of a turn in these indices? At this point, we just have to say, let the evidence be the close of the day, going into maybe the end of the week. I think it's going to become an important week. Thanks for being here. I'll be back tomorrow. Check out my
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.